Good morning, everybody. It's Friday, October 25th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 3 1/4 at 418 1/4. November soybeans were down 4 1/4 at 992, and December Chicago wheat was down 8 at 573 1/2. This morning, we had a couple of export sales announcements from the USDA. 116,000 metric tons of soybeans to China for 24, 136,000 metric tons of corn to Mexico for 24. We are through, we are through 18 of 23 settlements for the harvest price discovery period for crop insurance. Corn is at 417 and soybeans are at 1010. Good morning, guys. We'll put a bow on this week here. Dustin, maybe just a little bit of discussion here on some of the action we saw yesterday towards the close, and what your thoughts are here as we head into the weekend.
Yeah, Dan, so we're seeing the first bit of weakness after what looks like, so far at least, a blow off top and some of these bean spreads. So Nove to Jan got in there all the way up near 2 3/4 under yesterday, and we're backed off as of right now. We're back into double-digit territory. We are going towards first notice next week. We've got option expiration this week. You think about all of those in-the-money puts that we've been talking about the last couple of days in the November contract. A lot of those are being held by retail or by position holders that they wanted long optionality, and there's definitely short options in there too. But if you think about the side that's not wanting to take on the unlimited risk of a short sale, they might be covering, and they might not be replacing it with something as strong going forward, such as a sale. And that results in the market being bought. That could have been the recent strength we've seen in the beans. That was specifically to the November contract as well, at a time that we're also seeing huge demand, and that squeeze on that Nove-Jan contract may have been related to that. Now we look out forward. The latest Memphis forecast is still minus 9.7 feet as we get into November, and we've got a little rain coming, but just we're going to need a lot to see the river replenished. The last couple of first notice day cycles for corn especially have resulted in near full carry rates. Sep East got down to 2,500 during the delivery window last time around. And I think that's something to watch out for. We're seeing a little bit of widening in the corn spreads yesterday and today to start the day. And you're getting to the end of that insurance window where you're back to holding multiple years of crop risk. You've got 24 and also 25 to consider for both corn and beans. A lot. Anyone that's not well sold after insurance goes off, for example, has the risk of what happened last year, which is we could continue to see some weakness between now and the next insurance guarantee we get for next year. That's not what I would necessarily predict, but just something to keep in mind as we get to that last part of harvest and river levels are still low. We've had some strength recently, but it doesn't mean that it's zero risk, especially as you get to the last part of harvest for corn, and we have to make some decisions on that December paper contract.
Yeah, Dustin, when you referenced a couple of times just somebody being out of position, can you explain that a little bit? We had a question that came through this morning, just what you're talking about when you talk about out of position.
Well, you could say that about any major one group. I think farmers were out of position last year going into November would be an example of it, and that would be we had a lot of reason that they didn't, cash was not needed to be raised to its normal degree last fall because we had a bunch of $7 plus sales in early calendar year 2023, and we had pretty decent crop size. So we came into October sub $5. We were in the $4.50 to $5 range as we finished out that calendar year, and a lot of growers, from what we saw at least, put it onto some sort of deferred payment mechanism. They went on basis only and rolled it to the March contract, or they did, some sort of DP, commercial storage to sell at a later date, just because that that price at $4.50 to $5 was quite a bit lower than what the multi-year average had been going into that point. Well, when we got into the end of that November contract, clearly there was a lot of this going on because the spreads just simply collapsed. We went to 85% of full carry, which was about 2,600 D's to March. That was D's 23 to March 24. I think that happened, and it happened so abruptly because too many people were holding on to long paper, right? A long basis only contract or a long DP, which is still a long D's futures contract in their name. And that came to roost at the end of November. Same thing happened as we got into January, February of 24. There's a lot of this position still being held. And if you look back like February 25th, 26th, 27th last year, we saw March of 24 collapse compared to the next months out. We also saw flat price collapse compared to what we had, for the prior 6 months. So
hey, Dustin, just to add to that,
yeah.
It also means like, to Dustin's point, there's a lot of people holding, long positions that never intended on taking them.
Right.
So they're out of position, right? When you got to the very end, they weren't willing to take ownership back of all those bushels. So they had to get out. So just to clarify.
Yeah. And I just kind of, not to harp on this too much, but like when you put everybody into these types of positions, now all of a sudden the calendar starts ticking, right? Because everyone has to make a decision before first notice day. And that's why we generally talk about this a lot in the show. It's like first notice day weakness is because all of these market participants that otherwise would have been spread out evenly in an orderly manner are all of a sudden having to, they're all getting that same phone call from the commercial at the same time. Hey, do you want to roll this or sell it? Right. Or if you don't do this by this date, you're going to get your next monthly fee as we go into that next contract. So it puts the clock ticking, and then everyone is making the decision at once. And then is the buy side of the market prepared to handle that? That's the question. And if the buy side's not subscribed to that, if they're not ready for that position, we saw what happened last year in the D's in the March first notice day windows. I'm not saying that that's necessarily going to happen again this year, but it does feel like after we've had some of this extreme spread narrowing for November, and now we're coming into a 2-day break that's been fairly massive on the spreads, maybe we get back to that first notice day of the November contract, and that is kind of that position is a little bit cleaned up. And we'll see. So
both ways. So a lot of times you'll see a move going into first notice day and then see the exact opposite move right after first notice day. So that's why first notice day is such a big thing. So a lot, like take these spreads, for example, if you have too many people short and out of position, meaning that they're not going, intending on delivering, they have to dwindle down those sizes before first notice day by rule of the CME, right? So they can only hold, a certain amount of contracts unless you're a commercial. So you have to get out of those positions, either roll, to Dustin's point, or cover. So sometimes you'll see a move that's, a big rally going into first notice day because there's shorts that have to get out because they're not a commercial. They're not planning on delivering corn or beans. So they get forced, out before first notice day. And then the opposite can happen after first notice day. Commercials come and deliver because spreads have narrowed, bases have gotten strong. They have plenty of supplies. So that's why around those times, you can see extreme moves both ways.
Right. And that's, to your point, that happened in like 2020 going into 21. We went from somewhere in the low threes, and then all of a sudden we're, well above 4, well above 5, well above 6. So you get into like the May contract 2021, which is typically a hard contract to get a lot of volume delivered. And anyone that's been rolling forward a short position, like Justin's point, and they don't plan on delivering that contract. They just happen to roll it because they kept making sales all the way up. And they really need to deliver off of like a June timeframe, June 2021. But they're short the May contract. There was huge inversions there because the market really wanted these bushels at that point in time, but no one was really prepared to deliver when that quantity that they were short because you're going into planting the window. So it can go both ways. It's a very good example.
Yep.
Good stuff, guys. Anything else to add on the grain side as we wrap up the week, or are we sitting pretty good? Okay. Ryland, we've got cattle on feed at 2:00 this afternoon. Beef production came back up 2.6% year over year. Pork up 2.1% year over year. We got some cash got going a little bit yesterday, and hogs cooled down. So wrap up the week for us here on livestock.
Yeah, no, you were right. Cash is definitely king right now. We were up $2 in the south, up $2 in the north. So we're seeing a lot of trade of 188 to 190 on the live side of the market and 298 for dressed. So Packers want inventory. It looks like they were paying up pretty good. And overall, the market still sees this as a really good sign. It feels like we're still trading some kind of tightness here, but overall, I mean, like we're starting to see the beef prices start to drop a little bit, but nothing significant yet. But we'll see how it shapes up next week. I think the focus is really going to be initially on the cattle on feed report, and we're expecting on feed on AQ1 at 99.8, placements at 95.6, and marketing's at 101.6. So we'll see what the report says. I think that's a good way that the market is going to position itself going into next week. But overall, if cash is still going to be good, we tend to kind of shrug off these reports just in the near term. So we'll see how that shapes up. Overall in the hogs, new highs for the move pretty quickly right after the open, and then a little bit of a key reversal. So just from a technical standpoint, looks like, we're going to see a little bit of more technical follow through, but overall there wasn't too much on the negative side. You did have cash down 259 and cutout was slightly lower, but we do have a cold storage report out. I think anybody that says that we're in a demand bull right now or feels like we're still tight hogs may still try to step in here from a more fundamental standpoint. At some point, it's just we would probably test some of these intermediate near-term moving averages, levels of support on the downside. So we'll see if those tend to hold. I think right now the feeling is that it will, but overall, I think just as we've seen, open interest has really been increasing quite a bit on this rally. So I imagine we're seeing a decent chunk of hedge pressure as well. So this could spur a little bit more of that going into next week.
Very good. I know you'll have your comments on cattle on feed here in your evening commentaries, and then we'll certainly visit about that on Monday. We made it, guys. It's Friday. Brian, it's Fun Fact Friday. What do you got for us?
Thanks, Dan. Happy Friday, everybody. I'll do a little Halloween edition since it lands on Thursday next week. So wanted to get ahead of it. So the roots of Halloween, date back almost 2,000 years ago to the ancient Celts. They celebrated a pagan festival called Samhain on November 1st, which marked the end of the harvest season. The night before, they believed that the dead returned as ghosts, so they would leave food and wine on their doorsteps to appease them. Sounds like the early beginnings of trick-or-treating right there. As the 8th century came up, the Christian church replaced Samhain with All Saints Day on November 1st, and the day before became All Hallows Eve, which then, as we know today, is Halloween. So with that all being said, we could probably thank the Irish as they moved over here from the potato famine and instituted their Halloween that we celebrate today. Speaking of the Irish folklore, a drunkard named Jack made a deal with the devil. Yes. That he would never go to hell. But as Jack passed away, he realized that didn't also mean that he got into heaven either. So he ended up roaming the earth with a coal in a turnip, hence Jack of the Lantern. And then when the Irish came to America, pumpkins were more frequently found. So Jack O'Lantern.
Oh, that sounds made up.
Yeah, well, you could check your sources, but
Jack of the Lantern.
Yeah, but getting some fun facts about Halloween though. Americans spend about $3.8 billion in Halloween candy every year. Isn't that outrageous?
I eat half of it.
Candy corn is synonymous with Halloween. I don't know if it's a food or flavored wax, but they produce 35 million pounds a year, or about 9 billion pieces of candy corn. That's my favorite. But haunted houses in the U.S. pull in close to 500 million a year. So quite a business there. So if we're looking to get some extra coin, maybe we open up a haunted house there. And then lastly, speaking of Jack, my son Jack wanted me to tell you a Halloween joke. All right, you guys ready?
Let's hear it.
All right. Why did the ghosts go into the bar?
Why?
For the booze.
Oh,
Have a great weekend, everybody.
That's a great one.
Oh boy, it's good. Good stuff, Bri. We appreciate everybody that tunes in on a weekly basis. throw us a like or subscribe. Certainly appreciate that. It helps us, and we'll keep you up to speed on everything AgYield, as well as when we put out new content, and keep you up to speed on the shows. So throw us a like or subscribe. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.